At the second day of the third edition of the World Pension Summit Africa Special in Abuja, panelists discussed pensions, financial inclusion, and improving insurance in the region. Dupe Ladipo of the Enhancing Financial Innovation and Access, Sefa Goho of the Young African Leadership Initiative in Ghana, and Mary De La Honti, General Manager Hester in Australia, give their perspectives on financial inclusion.
If you look at the total adult population from the survey that we did in 2014, we said the total adult population is 93.5 million. And then we tried to see, what products do these people have? And you can see that in terms of millions of people, formal savings products tends to be the most product they have. But in terms of 93.5 million versus 29.8, you can see it's only 30% of the population, adult population, that is using that product. And as you go down, you see the different number of millions of people using the various products. When we come to pension, you see that it's 5 million out of a total population of 93.5 million. So there's a lot of opportunity there. And when we ask people, are you willing to make regular contributions to ensure that you have enough money to meet your retirement needs? You can see that almost 70 million adults said yes, they are willing. But some of them say they don't know how to. They are worried about how irregular their income is, because when you ask people, are you saving? Because we talked yesterday, people say Nigerians don't save. We save. About 67% of the population says they're saving. But when we ask them, why are you saving? They're saving for emergencies, household needs, school fees, those types of things. Now, if we can get those savings, especially the ones to do with the emergency, which tends to be more about hospital or illness, etc., if we can get insurance to cover that, then maybe some of that money can be used for long-term saving in their pension. I mean, typically when you ask them, how would you survive if you have no pension in your old age, people say their children. They're looking at their children to provide that. Some people say livestock. Some people say jewelry. Others will say, land. So these are not things that you will find in the developed world people use for their long-term savings. So I think it's important that we introduce the concept of micro pensions in Nigeria, and we really get to be as flexible. We must be flexible in their contributions. We must be flexible in the amounts and the frequency they contribute. And we also should just consider how quickly they can withdraw their money, because if their concern is always about how they can, save for daily emergencies, they really need to be able to feel that if they put their money away somewhere, they should be able to get that money if some emergency arises. So I think those are the sort of issues PENCOM is trying to address as they sort of roll out or expand the pension to the informal sector, which is where we also see that in Nigeria, about 50% of the adult population actually are self-employed and belong to that informal sector. So to really get to that pension target of 40% by the year 2020, then a lot of work will need to be done around bringing the informal sector into the system and also encouraging the salaried workers, for all those ones in that salaried space, to also come into the formal pension system.
60% of Africa's population is under the age of 35. Once you understand that statistics, you realize that they're not a market. The youth market is not one that can be ignored. You need to start finding solutions of how to reach them, because, of course, none of them are thinking about their pensions. Okay, maybe I'm wrong. Many of them are not thinking about their pensions. So the education that needs to be given to them is real. I mean, from what I've experienced, across West Africa, across all the countries in which we operate, this is a real challenge.
In an ideal world, we want everyone to be able to flatten out those peaks and troughs of their financial life. Insurance for when they fall under the line, access to savings plans for when they're over the line, education to how to know what that line actually looks like. And what's really frightening in Australia is we've seen the growth of payday lenders, bad money. And we're trying to combat that, but the pension system has a real role to play in that. If you are a pension fund and you have members ringing up and trying to get their money out, you have some hardship cases that you need to be able to examine. They are more likely to walk into a payday lender than any other person. They'll more likely be women, I bet. And they are more than likely trying to feed their family. So we should be involved in this conversation. It's our conversation to have. And just as much as we want pension funds to build roads and bridges, we also want pension funds to build the capacity in society. And you can absolutely do that.
Yesterday, Kazim, an insurance expert, and Renata Delia, CEO, SCB Holdings, in the panel session on emerging insurer role, speaks on the issues around pensions and insurance.
There's been a lot of talk about financial inclusion and ensuring that people are aware of saving money. I think the insurance side of it comes in to ensure people are comfortable with long-term savings. If you look at the Nigerian market, there isn't that comfort yet. People are not yet comfortable saving for a long term. If you ask them to save for 5 years, they'll be like, no, I want my money in 6 months. I want my money like a bank. I want my money. So how do you ask people to save for 25 years if they're not yet comfortable saving for 5 years, 10 years? So I think with the insurance industry, it's kind of trying to get them comfortable with savings and knowing that that money exists there. Because it's about trust. Trust was mentioned yesterday. It's about building trust in the financial sector, which is the insurance and the pension side, to ensure that people are comfortable knowing that that money that is there will still be there. You can come back and get it later on. It's not going anywhere. And that gives them the confidence to leave the money there. And once you have the money there, then you can go and invest it and grow the nation, which is this 7 trillion fund that we've all been talking about, and grow that pot. But unless people add to the pot, in order for us to be able to use that money for other things, we'll just have people spending with money underneath their beds.
Well, the answer was very clear. People are interested in universal health insurance. Ibrahim, I look at you. And they were not at all thinking about pensions. In another country, a survey pointed out that their first need was with regards of natural hazards, drought, rain, landslides. And their second priority was, what is going to happen with me if the breadwinner dies? Pensions was not on their agenda. So maybe we have to rethink the word pension into savings, and as Yesidi said, short-term savings, because those people don't have a long-term view. They want perhaps their money back in 6 months because somebody became ill in the village. So maybe we have to brainstorm what pensions mean in countries where the majority of the population belongs to the low-income chart.
Renata Deliers and Richard Dowden of the Royal African Society UK share on how pension coverage and the issues in Africa can be improved.
A small percentage of the labor force is working in the formal sector. These are the only people who have a regular income. So in my own country, Togo, not 5% of the labor force has a regular income. It's only if you have a regular income that you can start thinking about putting money aside for your pension, for your old age. And there we have a second problem. Salaries are very, very low. This morning I read the results of a survey conducted by a South African consulting firm to prepare the national strategy on financial inclusion. 71% of the population faces regular financial difficulties. 37% faces every month financial difficulties. So actually, the salaries do not allow yet to pay extra to top up your legal pension. This is for the people of the formal sector. For the people of the informal sector, it's even worse. They have irregular and insufficient income. So how can you think about pensions then? Those people have other needs. Their needs are linked to the weather, drought, flood. If it rains a lot in Lomé, 90% of the people are facing flood. Landslides, together with flood. So the people need, in the first instance, instruments to cope with their day-to-day. Natural hazards, illness in the family, death of a breadwinner. Economic risks. They lose their work. Socio-political risks. If you do not belong to the right tribe, you may not get the money. So before thinking about pensions, we must cope with the needs of those people. And those needs are different from pensions. So as I said at the end of my speech, maybe we have to rethink pensions for the majority of the population in Africa. Because the majority of the population has not high income. I don't see yet an emerging middle class. Sorry to say, the majority of the population is still coping on a day-to-day basis with how to survive tomorrow. So we should rethink pension and adapt it to the needs of this population.
Well, I think in the past, your pension was your grandchildren. The African family extends far wider than the European or American family, which is pretty vertical. Your parents, your children, but that's it. In Africa, it extends to cousins, distant cousins, all of whom can call on you if they're in trouble. And under the family obligations, I mean, this seems to be universal in Africa. I mean, you have to fork out for funerals, weddings, things like that, and general support. I think the modern world is gradually shrinking that extended family model, and because of urbanization and the cost of school fees, of just maintaining a normal lifestyle, precludes extending it to 30 or 40 other people. So the only way then to protect your old age when you can no longer work is some sort of pension scheme. Now, because of the fluctuations in currency and the general rocky road of economic development, how do you maintain a steady pension, being able to pay into it and make sure that the value of that pension doesn't collapse because of devaluation? And I think that's the big issue now. And I think this conference will feel their way forward to finding ways of saving, and that saving, instead of decreasing in value because of devaluation of the currency, will actually increase so that it gets stronger and stronger and stronger, and gives people a decent life in their old age without having to rely on their relatives.
The outlook for the pension industry in Africa is one with great prospect of growth, but effective structures must be put in place to integrate insurance and also drive financial inclusion.